Last week, BT went to a New Jeans concert. Well, not really. They performed at a cultural concert as part of the Asian Development Bank's annual meeting held from the 2nd to 5th of May in Incheon, South Korea. I was there as transition finance was tipped to be a central theme of this meet. What does this mean for ASEAN, which relies heavily on coal for economic growth? ADB President Masatsugu Asakawa set the tone by saying that the global battle against climate change will be won or lost in Asia and the Pacific. He stressed that ADB will not invest in coal. But civil society groups took issue with the way the bank views LNG as its transitional fuel, which means coal-reliant countries will get support to move to piped gas, which is still fossil fuel-based. They protested that ADB's position would open the door to more LNG build-out in the region. Before this, the tension can already be felt in some of the seminars.
We cannot expect to take the burden of the climate, in which somebody will die in 2050, when we are dead today. It is a path we have to take on transition, and it's not about just renewables.
There was Adani Chief Financial Officer Robbie Singh, who singled out that the lack of transition funding for coal-fired power plants, even when such projects can cut coal usage by half. I also caught the Global Head of Climate Research for Sustainable Fitch, Aurelia Bridge, who helped to explain what has to happen from here.
I think right now the main issue with transition financing is a lack of universally agreed upon definition. Once we get a better definition, I think investors will start getting there because there's tremendous interest from investors, whether banks, asset managers or multilateral development bank. But because of the uncertainty around the frameworks, the credibility of the transition plans, investors are very cautious around this area of investing.